What's up, traders? So today I'm going to show you how I would trade Nvidia today with it being close to all-time highs and it having upcoming earnings next week. Now make sure you hit that like and subscribe button. If you're new to the channel, my name is Rashad. I am a full-time options trader. I bring in multiple six figures a year trading options, and I use the money I make from options in order to pay for my entire lifestyle. But enough about me, let's get down to business. So I'm assuming if you're watching this video, you already know about Nvidia, because if you haven't, you've been living under a rock. But Nvidia is a chip maker. They make AI chips, and they are now currently the #1 company in the world as far as market cap goes. So we can see up here, Nvidia is currently at $140. It's a bit of a red day, down 4% today. But if we look at the market cap, it is a $3.6 trillion company, and they have earnings on November 20th. Which is next week. Now, I am very, very bullish on Nvidia. I do think that we're still at the first or second inning as far as AI goes. So I do believe that Nvidia has a long way to go as far as stock price. However, let me show you a few articles with two separate opinions. So this article here, it's from Motley Fool, but it's titled "One Wall Street Analyst Says Nvidia is a Must Own Because of This Once-in-a-Lifetime Opportunity." All right, so I just want to scroll down here. So Melius Research says Nvidia is a buy. Melius Research analyst Ben Reitzer reiterated his buy rating, boosting his price target to $185 on Nvidia stock. Now keep in mind, as I just showed you, Nvidia is currently $140. This represents potential gains for an investor of 25% compared to Tuesday's closing price. While it didn't seem possible, we are even more excited about Jensen Huang's next chip than we were before, the analyst wrote. He compared the anticipation to excitement ahead of the release of Apple's latest iPhone 15 years ago. He went on to say that giving up on Nvidia after its hit is like giving up on Apple at iPhone 1 or 2. For context, since the iPhone 2 went on sale in July 2008, Apple stock has gained 3,540%. If that weren't enough, Wrights called AI a once-in-a-lifetime opportunity for Nvidia. Now, I fully agree with his analogy to the iPhone. Now, if you're old enough to remember when the iPhone 1 and 2 came out, it was brand new. We were just being introduced to touchscreen phones, smartphones, and seeing what all they could do. And while it was super exciting and seemed well advanced back then, what the iPhone 1 and 2 could do is nothing compared to what the latest iPhone can do now. And I do believe that AI has much more abilities and capabilities than just typing a question out in ChatGPT and getting a quick response. You know, Elon has already showed us that we're very close to having robots just walking around town here very shortly. Okay, so that's my opinion on that article, but let me show you this other one as well. So this one is also a article from Motley Fool, but it's titled "Should You Buy Nvidia Stock Before November 20th? History Says This Will Happen." All right, so I'm gonna scroll down. I'm gonna skip a lot of this. And we'll start right here. Blackwell is here. The expected growth in CapEx should be in part due to the company's plans to upgrade their chips to Nvidia's newest line, Blackwell. The rollout of the Blackwell architecture chips was delayed slightly due to some now resolved fabrication issues. Despite the fact that they haven't yet launched, they officially roll out sometime this quarter. It has been reported that there is already a year-long waiting list for the new GPUs. A successful debut for Blackwell will be crucial for Nvidia, but all signs suggest that that's already a near certainty. The Blackwell release comes on schedule with the new yearly upgrade cadence for AI chips that it announced in October of 2023. Keeping up with the pace would be a tall order for any chip company, but if Nvidia can continue to release new chips each year that are meaningfully faster and more efficient than the prior models, it will be hard to unseat as the dominant player in AI chip making. Now, what history has to say. Now, this is the part I really want you to pay attention to. Over the past couple of fiscal years, here's what happened to Nvidia stock in the weeks after its earnings reports. The average result across those 8 quarters was an upward move of 7.2% over the course of a week. Okay, so down here, if we look at the last 8 quarters, we can see it went up 3.8%, up 9.4%, up 23.9%, up 4.6%, down 4.5%, up 15.1%, up 20.9%, and then down 15.5%. So that tells us that the market typically responds positively to Nvidia's earnings. Now let's check out what analysts think about the stock. So we can see here that analyst price targets are a high of $200, a mean target of $155, and a low of $90. Now, if we look over here, we can see all the last 4 quarters. This red line is what they estimated for Nvidia's earnings, and the blue line is what was actually reported. So they have beat on all of the last 4 quarters. And if we scroll down, it looks like analysts are estimating 70 cents per share for Nvidia's earnings next week, and that would be a gain of 84% compared to the previous year. Now, be it that their Blackwell chips are already sold out for the next year, I do think that they will beat earnings again as normal. And if we take a look here, we can see that all analysts collectively, which is 43 analysts total, have it as a strong buy as well. Out of the 43 analysts, there are 37 strong buys, 2 moderate buys, and 4 holds. So collectively, all of the analysts for Nvidia are still very, very bullish on the stock. Now with that information, how would I trade it knowing that earnings is coming up here very soon? Well, I'm going to show you 2 ways I would trade it. The first one will be if you have a larger account, and then the second one will be if you have a smaller account. So if you have a smaller account, make sure you stay till the end of the video because I'll show you how you can make a very similar trade with a much smaller account. But what I would do is I would sell puts on Nvidia. Now, if you're new to options, when you sell a put, you are agreeing to buy a stock at a cheaper price than what it's currently selling for. And for doing so, you get paid money up front, which is called the premium. Now, before I sell a put, there's always 3 things that I check first. And the first thing I check is the expected move. Now, the expected move is just a price range that a stock is expected to move within a specific period of time. So I'm here on bar chart. However, you can find the expected move on several different websites. If you just Google it in, you'll find it. Now, I want to sell a put for Friday of next week because I want to pick the closest expiration date right after the earnings. So that would be November 22nd, 2024. And we can see that there is an expected move of 7.96%. So that would be an upper price of $153 and a lower price of $130. And so now that I know that their expected move on the lower end is $130, now I can move on to the second thing I check. But wait. What if you can make money while on vacation, while spending time with your family without constantly worrying about bills? What if you can make the money for your entire vacation while on vacation? I personally trade options full time and generate multiple 6 figures per year, enough to comfortably provide for my wife and 6 kids, and our multiple vacations per year. In Trade to Freedom, I'll show you how to create passive income streams that keep paying even when you're not working. You'll get my exact trades as soon as I answer them. Imagine being able to take that trip you've always been dreaming of, knowing that your money is still working for you. The link is in the description below. I'll see you in the community, which is the Bollinger Bands. So if we go over to the chart, here we have Nvidia's chart pulled up. And you can see these black lines here are called the Bollinger Bands. Now, the Bollinger Band is simply a technical indicator that aims to show you the range that a stock price is expected to trade in the near-term future. And 95% of the time, the stock price typically stays within the Bollinger Band. So you can see here, it's very rare that the stock price goes outside of the Bollinger Band, but when it do, it pops right back inside. But what I often pay attention to is the lowest line on the Bollinger Band. So we can see here, it's currently at $134. Now, what I typically do is take whatever that lowest line on the Bollinger Band is, and with the information we have from the expected move, I want to select whichever the lowest number is. And so this number is higher than the expected move because the expected move said a lower price of $130. Now, the last thing that I check is the delta. I typically want to stay below a delta of 0.20. And delta is simply the probability that the event occurs. So if you select a delta that is 0.20, that means you have a 20% chance that that stock price hits that strike price by the expiration date. AKA you have an 80% chance of probability of profit. So let's head over to the options chain and make sure that we select a delta that is below 0.20. All right, so here we are at Nvidia's options chain, and I have the date pulled up, November 22nd. Now, if we scroll down to the puts, remember I said I want to be at a delta below 0.20. So if we come over here to the delta column and we scroll down here, it looks like, all right, so 129 is 0.21. So 128 will be 0.19, which would be my highest selection as far as strike price goes. And it hits our other criteria because it's under $130 that we saw from the expected move. And we can see here at the mid price, I'll be paid $210 per contract that I write of Nvidia at this $128 strike. Let me pull up the calculator so you can see just how amazing of a return that is. So in order to calculate your return, you just do premium received divided by the money at risk. So in this case, $210 is what we received, and then you'll divide that by your money at risk. So at the $128 strike, it will be $12,800 at risk because every contract is worth 100 shares. So we'll divide that 210 by 12,800, and that gets us to 0.016. And of course, you have to times that by 100, and that gets you to 1.64%. However, we're only in this trade for up to 7 days. So now we have to annualize this equation. So what you do here is you'll times this by the number we'll get if we take 365 days and divide it by the 7 days that we're in the trade. So 365 divided by 7 equals 85.5, and then we'll go ahead and times it by the 1.64% that we got. And that is a 140% return annualized. And that is like super huge, seeing as the market returns about 10% per year. If you could do 140% every single year, you'd be a very rich person here in the near future. However, let's say you want to be a little bit more conservative. You can even go down lower than the $128 strike. Maybe you just want to get a nice little $100 out of it. You can go all the way down to the $121 strike to be more conservative, and it only has a delta of 0.11. So that means you have an 89% chance of probability. Okay, so I will likely be selling puts on Nvidia because I am 100% fine with buying it at a cheaper price and getting paid to wait. However, if you have a smaller account, let me show you how you can do this exact same trade with much less cash available. So if you have a smaller account, you could use leveraged ETFs that follow Nvidia for this trade. Now the two are NVDA, which is currently priced at $75, or NVDX, which is currently priced at $18. So because of the smaller stock price, it allows you the ability to be able to trade it with a much smaller account. Now, if you're new to leveraged ETFs, they simply look to double or triple the results of the daily return for a stock or a sector. So in this case, both NVDX and NVDL look to double what Nvidia does in a single day. So if Nvidia is up 1%, NVDX and NVDL look to be up 2%. And the same thing in reverse. If Nvidia is down 1%, NVDX and NVDL look to be down 2%. Now, I will say the one benefit of NVDL over NVDX is NVDL has weekly expiration dates. So if you want to follow this exact trading strategy, you'll probably need to use NVDL so that you can pick next week's expiration. However, if you're fine picking monthly expirations, you can use NVDX. So let's take a look at NVDL's options chain. So here I have NVDL's options chain pulled up, and I have the same expiration date of November 22nd. So if we scroll down to the put side, looking at the deltas, remember we want to select something below 0.20. So here's 0.20 at $63.50 strike. So I just want something under that. So we could go with the $63 strike, and for doing so, we would get paid about a mid price of $233. But when I trade leveraged ETFs, I typically like to be a little bit more conservative. So I'd probably scroll up and I'd probably go, maybe a delta of 0.10. And for trading the $56 strike, we would get paid $113. And that is even a higher return on our money than we got with Nvidia stock. But there you go, folks. That's how I'm going to be trading Nvidia for this upcoming week. If you'd like to get my exact trades, come join the Trade to Freedom community. Not only will you see all my actual trades in real time, you'll also get my full options course from A to Z. And you'll see the exact frameworks that I use in order to bring in multiple six figures per year from the stock market. The link is in the description below. Make sure you also like the video and subscribe, and I'll see you guys in the next one. Peace.